Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the background economic data is still pointing to a trade-induced global slowdown. It is a national holiday in the US, Thanksgiving Day. Limited financial market activity will resume tomorrow, their Friday, but it'll be very limited. All eyes, however, will be on retail sales, and there are palpable nerves. Bad weather may just accentuate the rise of online shopping, and many traditional retailers will be fearing the possibilities. In the trade war, the new US law that supports Hong Kong democracy is being seen as an obstacle to the Phase 1 deal, but perhaps not a major one. Markets brushed aside the potential of China walking away. The OECD sees trade volumes fading everywhere. Canada's current account deficit in the third quarter rose, but not by as much as analysts were expecting. But Japanese retail sales have plunged in October after a sales tax hike and, more importantly, a typhoon that kept shoppers at home. It was a worse than expected result. They fell more than 14% in October from the month earlier, more than the drop suffered after a similar tax increase 5 years ago. German CPI for November came in at 1.1% and holding a new lower rate. The UN FAO databases for October show that globally meat prices are up 13.9% in a year and dairy prices are up 5.6%. While this is good for producers, they're concerned about the sharp impact on consumers. Of course, much of the meat price increase is due to China's pork situation. The impacts are being felt far wider, however. So far, the price of cereals hasn't risen over the past year, and some of these are caught up in the trade war between the US and China. In Australia, capital expenditure in the September quarter was down 1.3% year-on-year, while plant and equipment investment was down 2.5%. A big pullback in the mining sector is a big part of this, but not all of it. US Treasury 10-year yield is now back at 1.77% and likely will stay there until Wall Street returns in earnest on Tuesday our time. Gold is unchanged at $1,455 an ounce. US oil prices are marginally lower, now just under $58 a barrel. The Brent benchmark is under $63.50 a barrel. And the Kiwi dollar is marginally softer at 64.1 US cents. On the cross rates were unchanged at 94.8 Australian cents and against the euro, 58.6 euro cents. That puts the trade-weighted index at just under 69.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.